my screen, so I'll just keep sharing until you share it.
Hi, everybody. It's good to see you all. Here we're talking about the charts, and we missed the 11:30 opening. Welcome to Conscious Crypto Traders. We've got a really exciting call for you guys today. We're actually super excited about it because in the feedback we've been getting, we're realizing, yeah. Oh, hang on. I've got something playing in the background. Sorry. We've got feedback. What's going on? Sorry, guys. I accidentally had the window open. Forgive me. We've got noise interference there. My bad. Okay, so we're super excited about today's call because what we're understanding from talking to a lot of people who've been giving us feedback, or a lot of the traders that Nicola coaches, that not everyone is super solid in how to trade a bull run. Okay, and one of the first things we're seeing is we're pretty confident that the bottom's behind us now, okay? And I'm gonna actually share my screen to show you all the macro level indicators are now showing us that we, so here we've got the Williams VIX fix has given us lots of solid indication of a market turnaround. We're about to get a bullish cross on the MACD and I'm looking at the weekly charts. When it's on the weekly, we know we're super solid. Let me flip over to Bitcoin here. On the miners hash ribbon indicator, we finally got the buy signal on the weekly. We've been looking at it on the daily for almost a week now, but it's actually showing up in the weekly now. Lots of super solid indicators to say this major retracement is now over and the bottom's behind us, right? But the topic of today's conversation is going to be all about how do you trade the bull run then, right? So now we've got the rest of the bull run ahead of us. We know that during a bull run, and this is something that Randall from Crypto Love talks about a lot, we can get 5 or 6 retracements up to 30 to 40% during a bull run. And 10 to 12% retracements are not uncommon during a bull run. We have lots of them, right? So today's topic is going to be really focusing in on how do you recognize when the peaks and valleys are happening within the bull run? How do you develop a trading strategy that you're trading effectively within the bull run? Because if you don't understand what's going on at the local level, at the 1 hour and the daily level, you can still get wrecked, right? And you can lose a lot of money, and I know that from personal experience, right? I've done live experiments with different trading strategies where I lost large amounts of money very quickly by not testing out my strategies in a test net before implementing them, right? So we're going to actually give you technical analysis, but we're going to be talking about this as we go through it. So before we get into the analysis, which Nicola's going to lead off, I just want to say thank you all. We've been getting really high percentage likes and subscribes and clicking the notification bell on all our videos, which has actually made us one of the fastest growing channels on YouTube. We're only a few weeks old here. A lot of you might not know that. We've only been in existence for 2-3 weeks.
Months.
Sorry, I meant to say months, 2-3 months. Thank you. That's my dyslexia coming out. Never trust a number that comes out of my head. Nicola corrects me when I get them wrong. But you guys have really been supporting the channel. We so appreciate that. So please continue to give us a like and subscribe, click the notification bell and select all on today's video. We're almost at 400 viewers, which is unheard of for a channel our young, that we've been doing that without advertising. We've just been doing that organically through SEO and live streams. So thank you guys for the support. We appreciate you so deeply. Feel free to share the channel and create some noise. That really helps the algorithm and really helps us out. So let's dive into this conversation. How do you trade the dips and the peaks using leverage in a powerful way during a bull run? Nicola, I'm going to turn it over to you.
Totally, yeah. And just before we start, NL8, who we still don't know who the name is, said hi, and he said, fun fact, trading with you wins trading without you loss. You really do make a change. That's awesome. Thank you so much. Guys, we are 2 subscribers away from 400, which is just phenomenal. You may be the 398th and the 99th and the 400th. So as Teresa said, we love your subscription. We are a tutorial channel. So yes, we're giving you live price predictions today, as well as on Monday, Wednesday, Friday, we live stream, but we upload tutorials on how to do technical analysis and how to trade, how to get your mindset on, and scenarios that could affect price action. So let's scooch on over to the charts as we explain our agenda for today. How do you recognize when we've got to a peak? See all these peaks here on Bitcoin? How do you recognize we're at a peak and we might just turn around and tip back down and go down quite a bit? And how far do we go down? How do you know how far we're going to go down? And then how do you trade that? So because Bitcoin and possibly Ethereum and possibly XRP and possibly ADA are already showing signs that we could be tipping, we're going to do our live analysis teaching you how to recognize the tops. So Teresa, you're going to start by doing how to recognize the tops. Then I'll do the Bitcoin, how to get your bottoms in so you know where the retracements are. And we'll look at how to do that for maybe a coming dip that we've got with Bitcoin, price prediction for Bitcoin, price prediction and any trades maybe for Ethereum, XRP and ADA if we have time. So let's go for it.
Awesome. Okay, let me share my screen again. So one of the things that's super important is that you start to learn to recognize when the market's turning around. That doesn't mean the bear cycle's back on. It just means you got to know when to take profit, when to scale out of your trades, and when to scale in. So lots of traders keep their trades open during the entire bull run. If you're a swing trader, you might not be doing any scale in and scale out. But if you're more of a day trader or positional trader, you might have some percentage that you take out and then add back in. And that is a personal formula you need to develop, right? I, in general, tend to take less out and add more in than Nicola does. But that's just a personal trading style, right? And, you know, when we look at our profitability, you know, she and I are neck and neck. So I'm not going to say my style is better than hers or hers is better than mine, right? But there's a couple things you always want to pay attention to. Okay, so we've got, I'm just looking at the 4-hour now. We've got the macro level indicator here, which this is a big one, the miners hash rate. I just showed you some of the other macro level indicators, but we've also got some indicators that we might be getting local tops. The first and one of the most powerful indicators you have of whether or not there is an imminent market turnaround is RSI and stochastics. Is there a divergence on the RSI or the stochastic RSI, right? So this is just the regular RSI. And this is a pretty massive divergence, guys. Okay, so look how high this peak is. And that's a, you know, so this peak is much lower than this peak, but on the RSI, it's significantly higher. So we've got a downtrend in the RSI here, while there's an uptrend in the market, right? The other thing we know is that upward rising wedges 60 to 70% of the time, I'd have to check Volkowski's book for the actual number, but they more often break down than they break up. The target of an upward rising wedge would, and probably we could say this wedge started somewhere back here, even though there is a touch point all the way back here. But usually when there's a gap that big, you wouldn't trade all the way back to the back of the pattern. You take your target measurement back here. But the literal target would be all the way down here in the 33 to 34 range. I think that's highly unlikely. Like almost, I would be willing to place huge amounts of money that there's no freaking way we're breaking down to the bottom of this wedge, right? Given all the bullish macro level indicators we have going on. But that said, that doesn't mean we might not break down out of the wedge. And remember, we've had 3 to 4 months now of Bitcoin consistently busting a pattern and doing fake outs and then breaking out. So I do think there's a high probability that before we break out here, we might bust this pattern downward, come back into the pattern and then break out, just given the way Bitcoin's been behaving, right? Because the near term indicators, these divergences on the RSI are showing us that there could be a retracement before we continue on up in the bull run, right? There's other indicators we could look at here too, right? The Williams VIX Fix is a great indicator of when the market's turning around. Look at the number of green candles it gave us to indicate, look guys, we're at the bottom, we're bullish again. But the last couple candles have not been green, even though we're going up. So that could be a lead indicator that, like on the weekly, that the market is softening and we're about to get one of these smaller corrections. So this, you know, we might be getting into the range where it's a good place to take profit, let the market retrace and add back to your trade. Also, one of my favorite, let me just find it here. I've got the DidiBam up here somewhere. There it is. This is one of my favorite paid indicators. This is the DidiBam indicator that was invented by Didi Taihutu of the Bitcoin family. He's got a huge YouTube following. I love Didi to death. He does a huge amount of philanthropy in the world. He sells this indicator to raise money for different charities and philanthropic projects he supports all over the world. And I got to tell you, this indicator is worth every penny because it so helps you nail the tops and the bottoms, right? And here, this is the DidiBam, and you use it in combination with this TikTok indicator. Didi didn't invent the TikTok, but he has the rights to sell it with the DidiBam. And you can watch when this is heating up, when this lower center support line is above 70, the market is overbought and it's heating up. And when the green line starts to cross over, we haven't had a cross here, so we might go sideways in a while. But usually when this green line crosses, look, we had a cross here and the market retraces. When this green line heads back down, we're usually in for a retracement. You can also see just in the shape of these candles, these are Heiken Ashi candles. They're a little bit different than a regular candle. So they use more of an averaging in to tell you what's happening in the market, as opposed to the regular candles, which are the literal tops and bottoms. But you can actually see we're starting to move down. This candle here on the daily has completely subsumed the last daily candle. In other words, it had a lower high, it also had a higher low. So we might still be moving upward or sideways, but the upward momentum, we're starting to recognize the upward momentum in the market is gone or is slowing down. One of those two things is going on, and we're probably going to see another market turnaround. So that's on the daily. If you look at the shorter time frames, like on the 4-hour, you can see the same divergence. If you look at the DidiBam on the 4-hour, you know, it's really showing, look, we're starting to get a lot of sideways movement. The market has lost its upward force, right? So this is where we want to start to get really cautious with our trading and look for places to take profit. And then when the market retraces, you add back into your trade.
Yeah. And I've just got a few more other indicators that I like to use. I'm on the daily, guys, and I've got a clear chart for you. We can go over to my pickup stick charts later and then look at where the trade is right now. But what I like to do is put in the line from the very beginning of the bull run to the bottom where we've touched it down really significantly to create a line that's like the line in the sand. We are not going lower, right? We've not ever traded below this line. And that way I can go, great, here's the bottom of the market. And right now that price range is, if we were to drop, and it would probably take a day to drop, that is sitting at around 30,300, something like that. So don't think it's going to go down there, but I like to have that line there so I can have the big picture. Then the next thing I like to do is put in the Fibonacci retracement tool, because we're still talking about the peaks, but we also want to talk about how far are we going to dump when we do. And the Fibonacci retracement tool shows support and resistance. And I like to do it from the top of the market to where the bull market started, so that I've got market structure for the entire market. And you will see that, oops, I haven't quite got it right. Where are we? Down here.
Pretty close, but not exact. Yeah, there you go.
Exact is important, because what you'll see is that the yellow line is the golden ratio, which is a significant resistance to come in on. You'll see we're above it now, and we were going up and up and down and not ever kind of like beating that. We also had a significant resistance line here for a couple of months, which we are now above, right? So we get our lines in. Let me just put that in yellow, and we put our lines in and we go, okay, great. Here are our support and resistance lines. We are looking pretty good. So we can look at this and go, even though we had this big dip, we've got some price structure. Now, the other thing that can show us where the tops are, and we talk a lot about this on the channel, the 4 EMA. And you can see that the 4 EMA, if you're new to it, is 4 EMA at Fibonacci. And then when you go into your settings, you want to create, the first one is blue, green, yellow, red. And then in the inputs, you want to change this to 8. And a shout out to Crypto Jack, who's the person I learned this from. So you can see that when we have blue, green, yellow, red moving averages stacked on top of each other, we are going up. We're bullish. A few times we get come close here, right, where we get these small retracements. It comes in really close on the daily, and then it expands out. So on the daily, you can see where the biggest drops are going to be when all of a sudden we reverse and we get red on top, and it's red, yellow, green, blue. And you can see that here, red, yellow, green, blue, boom, that was the time to short the market all the way down, to the bottom. And now you'll see we've reversed again at around about 36,400. And so once you do those reversals, we don't return back under those points. That's really important to note. So we've now flipped bullish at that level, and we've got blue, green, yellow, red, and now we're moving up. So then that's the structure, right, of the big move. So now you want to use the 4 hourly for your trades. Like, should I be putting in a short because we're going to get a really big dump? And you can see here that we've got blue, green, yellow, red, which is bullish. So we're still trading above it. And you can also see that this might be a symmetrical triangle, Teresa.
Yeah.
Which is a continuation pattern. So we might indeed.
It looks a bit more like an upward wedge than a symmetrical pattern, though.
Possibly.
Yeah.
We'll just watch it, right? Because we're still creating higher lows. So anyway, back to the 4MA. So this at the moment is not looking like we're going to get a significant retracement. We still will, obviously we always get retracements, but significant, I mean by 30 to 40%. And Crypto Love talks about in any given market, we always see around about 6 big retracements. And Teresa and I were talking about how one of them is usually the biggest one. We've just had 50%. So it's normal to get 11%, which is what we just had here. That was a 12% retracement. So that's normal. 15% is normal. 20% is normal. So even if we get a 20% or even a 30%, even a 39% retracement, we can still say we're in the bull run, right? That's not an indication that we're going bearish and we're going down, 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 down. There are other market tops that you need to look for so that we're getting to the actual market top. We're talking about peaks and valleys during the bull run today. So then what I do, coming down into the 1 hour, and you'll see this in a lot of our TA if you've been following us, you come down to the 1 hour to go, are there any crosses here? Like, are these lines crossing so that I can go, we're going to get a dump, right? This bearish divergence that we've got going on might just play out soon. And on the 1 hour, we're still looking pretty bullish. So then you want to get a preemptive strike on the lower time frames. Now, the lower time frames only mean we may get smaller retracements. So if you look here, when we crossed over here, when we went red, yellow, green, blue, which was like, this is the time that we're going to go low, because it was on the smaller time frame, it was only a small move. We're talking about the bigger time frames, and you use the smaller time frames to give us an early warning signal that that bearish divergence might play out. Oh, look, we've got lots of questions.
Yeah, that's great. And just to add to that point, you use the smaller time frames to figure out your entry and exit points, right? So the bigger time frames inform your strategy. Are you taking profit? Are you re-entering? The smaller time frames, so it's sort of like big time frame strategy, small time frame tactics.
Yeah.
Making sense? Yeah.
So. And NL8 just said, but ladies, these are lagging indicators. Some of the indicators we're showing you are lagging, and some of them are present moment. Like this is these moving averages are present moment because it's a moving average as it is now, depending on what time frame you're on. But the pièce de la résistance is the Ichimoku cloud, which is predicted.
Yes, our absolute favorite indicator.
So you can see that when we start seeing red on the 4-hourly or the 1-hourly, we could be going into resistance, in which case we could see those big retracements. If we see green skies ahead on the 4-hourly and the 1-hourly, that's an indication that if we get any retracement, it will be within that parameter of a 5% retracement, 10%, 15%, possibly 20, 25. It won't be the big dumps. And the caveat of that always is that it is presuming there's no price manipulation, but we can't always predict that, right? So this is one of the things that I will do on the 4-hourly. If I think that we're coming to a market top, and given that we've got a buy signal, I think that if we get a retracement, if this is a wedge, then we're probably going back to where the first candle touches. That's 44,980, right? That's usually on a rising wedge. It comes back down and it goes to where the first candle touches the beginning of the bottom of the wedge. However, a lot of our retracements of our wedges have been falling short of their target. So just watch for that, right? So to me, it makes sense that we would go back to 45,000 or just under 45,000, because that is a significant support level. And then we retest that. But we'll see as we actually do the TA for the current thing.
Another comment about lagging indicators is because you're right in saying you don't always place a trade based on a lagging indicator, right? You're more looking for the pattern breakouts, or you're looking for the bounces off the major market structure. And so you're right in pointing that out. But what lagging indicators tell us are the market tops or the market bottoms behind us or ahead of us? And they help us confirm what's that overall mindset we should have right now. So they inform the strategy, right? So if, for example, we were uncertain whether the bottom was behind us of this retracement, we would be trading differently right now. So that's why we want to pay attention to the lagging indicators, because some of those lagging indicators are the most powerful indicators we have of where we are in the overall cycle.
And this is the cracking cryptocurrency Ichimoku cloud, because it's set to the indicators. Early warning signs that we're going to get a crossover. If I turn the 4 EMA over, early warning signs that we're going to get a crossover and turn a little bearish is when the conversion line at the top, green, crosses over the conversion line.
The baseline.
The baseline, excuse me, red. So if you have a look here, right here, see how we came down and the conversion line crossed. which was an indication of bullishness, so bearishness rather. So even though we came up a little bit, we did have that bigger retracement, and that was some good comments in there. I'm going to get to the comments in a moment. That was 4.5%.
Thanks, guys.
4.5%, which is quite normal, right?
Something else about the Ichimoku that's worth mentioning too is when the lagging indicator, the lagging span, is running into all kinds of price resistance, like it's doing right now, like you're seeing now, it's running through the price action. That's often an indicator that we're going to see more sideways or even downward motion, not significant, but downward until it gets clear of the price action. It's a good thing to watch for.
Yeah, and the Ichimoku cloud is leveling off. So it looks like, you know, we're going to keep going sideways until the pinnacle. And because we've got that bearish divergence on the 4 hourly, that usually plays out within 4 to 8 hours, which is consistent with Wednesday morning. We often get an altcoin rally, which we've had. Bitcoin lags behind usually, and then we get a dump around about Wednesday afternoon, Wednesday evening, Thursday morning, if we've had a rally on the Wednesday. So this is consistent with that, and these are probabilities. They're not predictions, so to speak. So that's that. So what I want you to write this down if you feel to. We often get a 3%, 5%, or maybe a few pips earlier or later, 10%, 12%, 15%, 20%, 25%, 29%, 30%, 33%, 35%, 39%, sometimes even 40% retracement in a normal bull run. So whenever we start seeing the top, oh, we've got a bearish divergence, it's still looking bullish, but we've got a pattern here and we might break down. You want to use this tool over here on the left-hand side, and you want to go, if we go down 3%, that's going to take us to, it's going to take us to the top of the Ichimoku cloud, in which case the Ichimoku cloud is supporting us, creating a higher low, which is still bullish structure, right? And you want to make a note that that's 45,286 approximately. What if we keep going to 5%? Where would that take us to? That takes us to around 44,219. So you want to write that price down. We've got the golden Fibonacci. We already know what that price is. It's sitting around 43,888, right? And then we want to go to 10%. And we want to write that price down. 10% retracement is 41,975. And then the next one is 15%. 12% rather, just over 12% is 40,700, 40,500 actually, I think it is, which is kind of close to the golden ratio. So then you're looking for confluence, and you just keep doing that. You get all of the, or go all the way down to 40%. We've already had a 50% crash. I think it's unlikely we're going to see a 40% crash until we get way up to maybe 100,000, 120,000. But these 35 and under are possible. So we've got the Fibonacci level at the structure of the market. So now what we would want to do is we would want to put in the movement of where we're at right now to see if there's any confluence with any of those percentages that we've just created. So I would take it from the swing, the highest price we've had to date in this movement to the swing low down the bottom here. And that gives us the movement structure of the Fibonacci. And because we want to do retracement, we do it the opposite. We start the Fibonacci tool at the lowest point, take it to the highest point, and then we've got all of these other Fibonacci lines. We can see that the golden ratio of this whole move in the market is 43,925. So we've got a little bit of confluence, and you can see along here, a lot of resistance there. quite a bit of support above it. So this is quite significant. So what is that as a percentage? And that's only a 6%, Teresa.
Yeah.
That's a small retracement, but quite likely.
And one of the things I love to check that Nicola and I often do this together is, how did the bigger fib lines that Nicola just drew on from the entire market structure compare to these fib lines from the local movement? And when those things start overlapping or they're in very close proximity, those are super significant confluences in the market to start paying attention to from a peaks and dips standpoint. So
consider them to be magnets, right?
Yes. Yeah, that's a good analogy. Yeah.
Like, and so here's what I'm seeing immediately. Now we're going to niche in to see, is there a trade here, right? I don't like shorting and bull runs because quite often Bitcoin will U-turn halfway, and if you don't catch it, then you're screwed and tattooed. Have a look at this.
If you're shorting in a bull run, guys, watch your trade.
Watch your trade, yeah.
Like because you're more scalping than you're day trading if you're shorting in a bull run. So you should be at your computer looking at your trade every few minutes if you're shorting until your stop loss is in profit. And then you might use a fairly tight stop loss because it's a lot more risky shorting when the macro indicators are bullish. Yeah.
So if we fulfill that prophecy of a dip down to the golden ratio at around 43,892, we're creating a Bart Simpson. And often when you see sideways action go on and on and on and on forever, then it is a sign that we could get that Bart Simpson, which just looks like Bart Simpson's head. However, we might not go all the way down to the end of it. We might fall short up at the fib line of 43,860. So you want to just have all of those in, because if we start going into a free fall, you don't panic and you don't have your heart palpitating because you've got an idea of where it's going to land. Does that make sense? So let's have a look at what's going on in terms of the trade. We've got some good comments here. The dump happened by the time the indicators show them. Yeah, so we've talked about that. Short-term trend change. No, it's not a trend change to the downside. It's definitely just an ordinary correction throughout the whole movement. Ashton has said August 11th, 2021 is also 666 weeks and 6 days since the release of the Bitcoin white paper back in 2011. That's
significant dates. If you believe in numerology, that's kind of fascinating. Yeah. Yeah.
So that 6 and 6 is 12, 18, 19, 20, 21, 22, 23, 24. That's a 6. That numerologically, all of those numbers add up to a 6.
Yeah.
So that is very interesting. 6 is all about relationships. So we'll see how that plays out. That's really interesting. You all know that we're watching the Saturn retrograde fractal, which is 2020. The Saturn retrograde has
got to pull up the Saturn retrograde fractal because it could be one of our dominant forces right now.
Yeah. We're looking at did we just get the Bart Simpson beginning, and are we now going to trade sideways significantly to get the Bart Simpson, in September, sometimes coming back down the other side? So we've done a lot on that. I'm not going to go over that, but just letting you know that we are watching that, and we will report when we've got something to say. So what have we got here? I would call this more of a you could make the case for this, Teresa, that this is actually an ascending triangle.
Yeah, especially if you join the peaks.
Yeah.
So this is where it's important to remember that the market structure is just a representative of what hundreds of thousands of traders are trading in the market. Yeah. And you can be highly confident that there are traders that have this delineated out in both ways. So some people will be trading it as one, and some people will be trading it as another. So you want to pay attention to both when there's two possible scenarios that could be represented here, but you've got to make a judgment call in your own mind as to which you think is the one that makes more sense and is more probable that the majority of people are paying attention to.
Yeah, exactly. So if this is a symmetrical triangle, it's a continuation pattern, meaning we're going to continue to the upside. If it's a rising wedge, it's a bearish pattern, means we're going to come back down here. If it's an ascending triangle, 80% of the time breaks to the upside, in which case we are looking at continuing up to 48,000. We have significant resistance at 47,000. We also have significant resistance at 51,000. Ultimately, we're heading to 53,000 because remember, we've been in that pattern for 2.5 months where we broke out of the triangle, and the top of that triangle is 53,000 approximately. If you look at Monday's TA on that, you'll see the bigger picture for this week's targets. So now what do? Well, we wait to see what the price action is going to do, and we pull in our Ichimoku cloud and our 4 EMA, and we go down onto shorter time frames to see what could possibly be happening. And the Ichimoku is looking slightly bullish sideways, but we do have some crossover happening here. So if we start to see on the smaller time frame, red on top, red, yellow, green, blue, which we're not at the moment, we're still trading sideways. If we go down to the 3-minute, we still don't have it. These are the indications that we're going to head down, and we could head down to the bottom of the pattern and bounce back up and come back up. Or we could break up. So we're still bullish on the lower time frames, which means what we could expect is further sideways action and consolidation. Teresa, this also looks like it's a bull flag.
Yeah. And one of the things I was just looking up in Bulkowski's, I often pull out Bulkowski's book when I'm looking at a specific pattern. He talks about for symmetrical triangles, busted patterns perform better than the originals. So if we do end up in a scenario where this breaks down because of that bullish divergence, comes back into the pattern and breaks out, we're far more likely to reach the target if it busts first. In other words, busts means it breaks the lower support line, comes back in, and then shoots out.
Yeah.
So that's an interesting fact about symmetrical triangles. I was just looking that one up because I wasn't certain if I remembered that correctly, but.
Hey, did you see the comment there from NL8? You should be training all those profits on YouTube and company.
Thanks, guys.
Others can't explain it now into a single sentence. I often read Bitcoin retraces to the 0.382. What was the reason you look at 3995? Okay, cool. Yeah, really good question. On your Fibonacci's, you've got all these levels on the left-hand side. The most significant one is actually 0.618 because that's the integer in which all of them are divided by, and we have 2 of them in the in this area here, right? So you've got 1.618 and then 0.618. Those are the golden ratios, the most important lines in the whole of the Fibonacci. The 0.382, correct me if I'm wrong on this, or if you've got anything to add, Teresa, that's usually an indication that we're moving away from the golden ratio and we're starting to go into moon possibilities, right?
Yeah, and that's a great question, though. You're obviously an experienced trader if you're asking questions like that, so I love that. Something to think about when you're in the world of Bitcoin that's different than the world of Forex is that Bitcoin's decentralized and therefore unregulated. So there's a difference between where the target might hit and where it's prudent to take profit or where it's prudent to place your trade.
Yeah.
So I think a lot of people teach slightly more conservative numbers because Bitcoin very often, well, cryptocurrencies in general, very often don't quite meet the target. or don't, you don't quite retrace to the point we're thinking of. And I think that's important to remember whenever you're dealing with cryptocurrencies.
Yeah. Yeah. And if you're using it where you went from the swing high to the swing low, which I did, I just reversed it. The 0.382 is kind of like your midway point between the beginning of the movement and the golden ratio, which is the significant resistance to get through, to get into, bullish momentum moon territory. So,
Yeah.
but the golden ratio, without a doubt, is the most important, because that's the whole crux of the Fibonacci. Whoops.
And levels you're watching aren't necessarily the same as levels you're trading. Just to really reemphasize that point, right? You're watching those levels, but you might put a trade just above them or just below them, to be certain your trade catches. And then you just got to be prepared that you're probably going to watch, your trade dip into the negatives while the market figures out it's turning around, right?
Yeah. So here's the deal. A lot of traders will trade breakouts. So in this little wick here, if they traded the breakout and all of a sudden the price action goes above the line and they don't wait for a clear candle with the bottom clearing the top, you could come all the way back down. And if you had a tight stop loss, you would have lost crypto on that, right? So the more conservative approach is wait for a clear candle breakout. So we know we've gone above the resistance. We're coming back down to retest it on the bull flag. In this case, the line on the bull flag is the same as the ascending triangle. Come back up. As long as we've got volume and we've also got the RSI has got room to move to the upside, you would enter above where the breakout candle cleared, right? So let me see if I can, bring that in here a bit. So where you enter, because we're not a signals channel, but we do tell you what to look out for. Where you enter is going to depend on where the candle clears when it breaks out. So right now we're looking, are we going to break up out of this resistance? And the more times we touch it, the more likely we are to break it to the upside. However, if we touch it a few more times and don't break out, then what can happen is it's kind of like, you're knocking on doors and it's not opening. And so you turn around and you go back a couple of meters to get some momentum so you can race at the door and then just, have the strength to just bust it open. That's kind of like what the price action is. It comes back down to gather steam to come back up and charge at it again.
Yeah, really good. And personally, I would never trade a breakout to the upside with a bearish divergence on the RSI without seeing that confirmation point. And in general, I would be pretty cautious going in because I'm paying attention. Because when you see a bearish divergence on the RSI, we might just be getting a fake out. So I would want to see lots of volume, lots of confirmation indicators before I put that long in, because that bearish divergence on the RSI is like a warning signal to be cautious with how you trade. That doesn't mean I wouldn't still place the long. I might still do it, but I'd watch it like a hawk. And if it looks like it's going to turn around, I'd get back out.
And put in a really, really tight stop loss, right? And the other thing is the Ichimoku cloud is looking like it's more likely, because here's the deal. This is a triangle of some description. We're not towards the peak where you would normally break out. We'd be breaking out early, which is really not a good thing. Ideally, we do want to come back down, reverse, come back up, get that momentum to go up higher, which means that you could trade the bottom of this. As soon as we bounce off of this support line, head back up, you get into the long and you ride it up and you see what happens once you get to the top. You either can jump out here, or, if it looks like it's going to bust through, just hold it open and then add to your position as we bust out. Those are all different scenarios. Our electricity is going on and off, Teresa. So guys, if we get cut off, we have a generator for our
we're in rural Costa Rica, forgive us.
We're in Costa Rica, so power outages. We do have a generator which is kicked in, but if we disappear, that means the generator's used up. So let's look at Ethereum. Ethereum is in this rising channel, which breaks to the downside more often than the up. But you remember with Ethereum can trade in these channels for weeks and weeks and weeks, right? The whole bull cycle last time was 3.5 weeks of going up to the top of the channel, back to the bottom, up to the top, back to the bottom. So massive opportunities to long and short all the way up to its target. The current target of the W pattern is been doing that for the last week. Remember, we've got this W here, and that is 3321, and there's also another pattern, this bigot pattern here, the triangle. No, the other way around. The triangle is around about 3014, and then the W is around about 3321. Whenever I'm setting my targets, I always come 20 to 50 pips below. I don't wait till it goes all the way up to the top. That's just why I learned that from MMCrypto, and I think that's a pretty good thing to do. But we are more bullish in Ethereum, which could be an indication of it, because we are of Bitcoin not actually, retracing too far, because we've had a bull pennant, came out, tested it as support, right, the previous resistance line, and now the time to enter the long would be once we clear this breakout candle at about 3277 and ride it all the way up to the top, which is 3,400, except, as Teresa said, we have a bearish divergence on the 4-hourly, ever so slightly. Oh, we might not now though, right? Because now
it's shifting a little bit. So it's not nearly as strong on Ethereum as it is in Bitcoin, right?
No, this could be getting invalidated.
Yeah. So there's our electricity's back. Yay.
Yeah. so there's nice long there. And always, guys, always get your Ichimoku cloud in and go down to the 1 minute and the 5 minute, so that you can see, are there going to be any surprises? And if we've got red sky ahead, it's a potential that you could end up with a better entry position. In this instance, there's no red sky. It looks like we're trading sideways in the green. Let's have a look on the minute. And we do have a little bit of red there, but we could go way up and then come back down again. Oh, look, it's dropping.
Oh, look at it, it's dumping. Woohoo. Somebody's making money.
Where are we going? Yeah, so it's got rejected off of this, the bottom of this bit here, the bottom of the triangle, right? Which means this could now be, ta-da!
Yeah, Ethereum loves to trade in channels.
Yeah.
It is the channel cryptocurrency more than any other. So yeah, I wouldn't be surprised to see that at all.
In which case the target could be 3332 out of there, just depending on where this is, because this is ascending, boom, boom. So the higher we go before we break out, the higher the target's going to be. So that's what you want to watch out for. And what you just saw me do is what you want to be doing all the time. After you've had candles and you have these dips and what have you, you can get a better sense of what pattern is forming, and then you can just watch it and what have you. So if you want to long this to the top, because this is a pretty big channel, you would wait for the green, you'd wait for the bounce, you'd wait for the next hour candle, which is in 3/4 of an hour time. If it's green and it's heading back up that way, and your Ichimoku cloud is looking okay, just be careful on the 1 hour. You've got a straight edge there. Straight edge can often be a huge pump or a huge dump. So just watch that. But anyway, you could long there and long it up to the top and to the breakout, or wait. The problem with this though, Teresa, like whenever we've got sloping upwards, bull flags, if you trade the breakout to the top, you're almost getting to the top. You know what I'm saying? It's like your entry point is higher and higher and higher. These ones, it's almost better to get in at the bottom of the flag when it's reversing back up, right?
Yeah.
Yeah. Cool. XRP. Everybody knows I love XRP because every XRP you win in the trade could be $1,000 in 4 years' time. XRP is looking really bullish. We might get a bit of consolidation here at this, just under the resistance line of 99 cents. And it looks like if this is creating a bull flag, we'll just have to wait and see what pattern this is going to form. I always like to draw my lines and then I just move them as the price action moves. I'm not married to the pattern. This is going to take us to $1, guys. We're going to go to $1.07. Now, what you want to remember, longing from this point onwards all the way up to $1.08 has a ton of resistance. So we need some good news. We need that Hinman SEC thing that they have been, hiding. We need that to break, right? We need some fundamentals, some news to give this momentum. We are actually in the process of coming back to the top of this descending wedge that we've broken out of, and the target for that is $1.21. We might wick up to the golden ratio at $1.25. So if we break, let's put this in here. If we break, or when we break $1.08, we get through all of the resistance. I think we're going to see some pretty strong excitement all the way up to the golden ratio. So let me just remind you what happened around sorry, here we go. Around, where are we? Here we go. Around $1.03. When we got to $1.03, which is this Fibonacci line here, and it went to $1.08. If we go down onto the hourly, ta-da! We spent several days trying to bust through this resistance, right? We came up, fell back down into the pattern, came up, fell back down, was resistance again, fell down, resistance again, came back up, fell down, came back up, fell down, came back up, fell down, and then went all the way down. So in order for us not to repeat that as we go through that resistance zone, we're going to need good news out of the SEC, or excitement in the trading, or Bitcoin doing its thing, right? Bitcoin taking off. To bust through. So if you're longing this, you may have to keep this open for quite some time. Are there any divergences? There are no divergences. Let's have a look on the 4 hourly. There's a nice W there, boom, 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 that played out nicely, met that target right at that resistance. So there's the 4 hourly. We don't really have a pattern there. Yeah, no, I reckon this is getting ready to blow.
Yeah.
Guys, go to the channel Legal Briefs. Jeremy Hogan, he's the one that's breaking the news on what's going on with the lawsuit with the SEC against Ripple. If you see anything going in his channel that looks positive, I would, for me personally, I would preempt by putting in a trade, and I would just put in a small trade to catch the moon, because I feel like this is getting set up to just take off. I just feel it. Could be wrong, always happy to be wrong. So even though I've just said we've got a whole lot of resistance above us, we could be getting some news that's just going to override that. So just watch out for that, right? At the moment, this is a classic bull flag, waiting waiting for a good entry position. Anything else you want to add to that, Teresa?
No, just, just pay attention when you're trading XRP, because that is a pretty heated run up, right? So I think there's good odds we're going to get a bull flag or some kind of consolidation for a bit while it gains traction. May even come down before it keeps going up. But I think XRP is looking pretty bullish on the macro scale. And XRP is one of those things, I'm taking a little bit more risk with XRP because when the announcement of that SEC lawsuit comes down, I want to be in a trade.
Yeah.
Right. And so sometimes your macro strategy informs how you're trading on the micro strategy. So personally, I think it's worth it to take a little bit more risk because if you're in a trade, it's way easier to scale up and go to bigger leverage if you've already got a trade you can average up from. Right?
Yeah. We've talked about XRP. We trade XRP differently, have a completely different strategy because it's an Usain Bolt, who was an Olympic sprinter from Jamaica, who just bolted ahead of everybody. And that's exactly what XRP does. Am I expecting that we will get resistance at $1? I think the resistance will come between $1.03 and $1.05, not at $1. Right, it'll become here it is here because there's the Fibonacci level. The Fibonacci level of market structure is at $1.03, and then the other resistance is at 99 cents, 99.5. Right, so if you wanted to get into a long, I would wait for a green candle to similar to head back up and trade this up, as I said before. Just briefly, going to do ADA.
Actually, one more thing about XRP just before you switch. We did a video some time ago on how to trade a blow off top. If you're trading XRP, I highly recommend you go and watch that video because when that SEC lawsuit is resolved, if it is in Ripple's favor, I fully expect we are going to get a short-term blow off top. And you don't want to be figuring out how to trade a blow off top in the middle of a blow off top. It's very easy to get wrecked in the middle of a blow off top. And if you know how to trade them properly, there are opportunities to make massive amounts of money. So have a strategy in mind and practice it in your head, right? So go watch that video we have on our channel. Yeah.
With XRP, there are signs that we're heading towards $4, and $4 is above the market top of the last bull cycle, which is around 350, which means we'll be in price exploration once we hit $4. And depending on what's going on with the lawsuit as to whether or not that's just going to shoot up to be the value it should be. It should be like XRP should be at least $6 right now, right? But it's not.
Huge price suppression on XRP. Yeah.
But here's the deal about price suppression, because I saw this last year with Bitcoin. It was suppressed, there was manipulation. All of the YouTube prophets and gurus out there were talking about how the price was being suppressed. And then all of a sudden Bitcoin just goes, you know what, I've had enough of this shit. And then it just throws off the shackles and it just bolted, and it left everybody behind, right? So, well, not everybody, but it just left people behind. So I think that's going to happen with XRP as well. So just watch for that. So what I'm doing with XRP is I'm scaling in and out, like I'm getting in at the bottom of the move. I'm taking profit as soon as we start looking, like I took some profit here. I actually just took some profit here, and then I just keep putting it back in. So I take some profit out, and then I'll put some back in when it looks like it's going to do its next move. And then I'll take some profit where it hits resistance, take some out. And I'd usually do 50-50 or 75-25, depending on whether it looks like we're going to get a major retracement. If it's going to get a major retracement, I'll take 75% off the table. If I think we're still going to go up, I'll only take 50% out. But just briefly on ADA before we finish for the day, ADA does the same thing. It's a bolter. Boom, look at that, without any major retracement.
It's a chicken head. You drew a chicken head.
Oh, yeah. I will explain that in a minute. I'm spot trading ADA for Vestamundo projects here.
Give us a like if you like the chicken head. That's just the best charting I've ever seen.
we better comment. Yeah, we better remind you also, we've got the 3-day workshops Become a legendary trader living a legendary life without losing it all in taxes. 3 days. Everything you need to know to trade the super cycle that's going to happen around, we believe, October when we come out of Saturn retrograde. Lots of really big speakers are coming, and you want to be there. And the price goes up on the 15th of August, which is in a couple of days. So you want to get your early bird ticket today or the next day. Link for that is below in the description. It's theconsciouscryptoevent.com/2021. Link below. Get your ticket. ADA, trading this pattern here. And we are in this bigger, let's just go to the daily. That is Carl from the Moon, I think, must have put out a video. See this big descending triangle that we've come out of? The target is sitting at around $2.02. We're almost there, or $2.01. I put it here actually. We're almost there. We're at $1.86. We're coming up to that $2. We've got resistance. So now let's put what we learned at the beginning into practice. We want to come to the 4 hourly. Are we going to see a blow off top? On the 4 hourly, do we have any bearish divergences? Doesn't look like it.
Yeah, looking pretty solid.
Looking very, very solid. Do we have any on the 1 hourly?
Very, very small one at the end.
Right there.
Yeah.
No.
Oh, you're right, because the wick is the higher peak. Sorry.
Yeah. No,
I missed the wick.
Yeah, that's actually a bull
pennant.
So
that's looking pretty solid too, actually.
That's a bull pennant. So it looks like we actually might go to $2 soon.
Yeah.
It's a bull pennant, and that's gonna break out any minute to the downside or the upside. Usually breaks to the upside more often than not, and that's going to take us to $1.98. But we'll see what happens at this resistance level. Now, the reason why I've got all of these is the other part of what we were teaching is how do you recognize we're going to turn around and go back down after we've done a big bull run or a bull, like a run or a rally, they call it a rally within the bull cycle, right? And what I'm looking for are M's, and I put them here to jog my memory because I'm so busy, I don't always remember, right? So this is an M. And this is a head, and this is a shoulder, a head, and a shoulder, fellas. That's what that is. It is not anything else. And this is an inverse cup and handle. And this is
we know we have a lot of male followers.
This is a descending triangle, and this is a rising wedge. So I'm looking for these patterns to signify to me that I need to sell 3/4 of my ADA to buy back in again to spot trade it once it comes down for a dip. These patterns are going to signify we could be getting a significant enough dip for me to make 10, 20, 30% more ADA by selling at the top and then buying back in at the bottom. I don't do all of it. I just keep some staked, so I don't touch that. And then that's where we go from there. So that's why those signs are there. But this is looking bullish, guys. We're headed to at least $2.01. And if you remember, when we went above $2 last time in price exploration, we didn't stop. We just kept going and going and going and going. $2.60, I think we topped out at, wasn't it? 264. Yeah. 264. See here, here's the candle shot up, which is just exactly what we've just done now, right? Shot up, boom, look, shot up. 2 green candles on the daily, a third green candle on the daily. We haven't had that day yet. 4th green candle on the daily. So if we go to $1.21, it is possible we do not see a retracement until we touch the all-time high again, and I've got goosebumps on that. Isn't there a cup and handles on here on the monthly? There is.
I have not looked for that.
Yeah, there is. There's cup and handle.
Yeah.
So there's a cup and handle here. And where does that take us?
You might want to draw it out for them so they can see it.
I'm drawing it out now. There it is there.
Yeah, I just mean the cup.
Yeah, here's the cup.
Yeah.
There's the handle. We've broken the neckline. We've come down and said, yes, this is now a support level. It is not a resistance level. And now we're going back up again. And really now is the time to enter the trade for the actual, it takes us to price discovery. It takes us 1 cent above the price discovery.
Oh, that would be fun.
So here's what
happens. And a cup and handle is one of the most solid patterns from a standpoint of reliability. It ranks one of the top patterns.
Yeah. Guys, just to let you know that some of the best stuff we give you is right at the end. So when you're coming into our live streams at 11:30, it's 10:30 Pacific US, 11:30 Mountain Time, our time, we usually go for 40 minutes to an hour. Plan your lunch. Have an early lunch or a late breakfast or whatever your time zone is with us, because a lot of good stuff comes right at the end. So here's what happens. When we break this Fibonacci level here, we've got not a lot of resistance up to the golden ratio, which is at $3.96. So here's what could happen. We may not see a retracement significant with ADA. It could just go back. It could bust up, back up to the all-time high, get into price discovery, which takes us into golden ratio territory and go all the way up to the golden ratio and maybe stop short and retrace there or not. I don't know. I'm speculating. I'm predicting, but that's the cup and handle. And we have confirmed this breakout of the cup and handle. So now we are in the process of getting to the target of $2.67, which takes us into price discovery. It blows us out of the last all-time high, right? Which is right on that Fibonacci level of $2.45. So awesome. Ladies, can someone check if they got my email about, yes, Ashton, we actually sent you an email back with the Bitcoin, what do you call it? The wallet for you to send it to. So check your email. I will make sure after I get off this call, I will resend it to you as well.
Awesome. Guys, thanks for all the comments too. We really appreciate it.
Totally.
Yeah.
Marina says, doesn't it need to cool off a bit to go down a step?
If it were any coin other than Cardano
or XRP,
I would say absolutely yes. You're talking like a seasoned trader when you're asking that question. So that's an awesome question. These are two coins known for strong run up for both these coins. So we just want to be watching the indicators to see. Yeah.
And here's the deal. It doesn't need to.
Yeah.
Like no, it doesn't need to. It would be preferable if it does, because that gives us really good structure. But if you go back into the history of any of the coins, you are going to find, what was it when Bitcoin did 6 months in a row of green candles, which was, and it didn't need to retrace, it just kept going.
Yeah.
Right.
Yeah. Now that doesn't mean there weren't small retracements within those monthly candles, right?
Yeah.
Retracements cause stability in the price action, right? So the more a coin retraces, the more confident we can be that the new levels will hold, right?
Yeah.
But it could just be a lot of smaller retracements rather than one big one, like, you know,
And I think that you must remember that for 2.5 months, we've been in the doldrums with the threat of going a lot lower. And I personally believe there was a tremendous amount of price manipulation holding the price down. I could see it. I was just going, this isn't making sense. So many busted patterns, Teresa. We talked about it, right?
Yeah.
So many busted patterns. And I'm going, this isn't making sense. So whenever there has been massive manipulation or suppression of the price, you will see these runs, because it's kind of like, I'm free and now I'm running to where I should have been all along. And it's a race to get to where it feels it should be.
Yeah, exactly. So Nicola's losing her voice, so it must be time to wrap up.
Must be time to wrap up, guys. We'll see you Friday in time for weekend trading, right?
Yes. And, you know, guys, invest in your education. Sign up for our Conscious Crypto event. It's a fundraiser for our infrastructure projects here in Costa Rica. We know you've lost more than this on individual trades. We've met you. You know, and the number one thing that successful traders do is they invest in their learning, right? And you are going to get more at this event than you will get watching individual YouTube videos, because there's stuff people can't say on YouTube, right?
Yes.
Because of the YouTube
censorship.
Yeah, I was trying to find a better word than saying that one, but yes. And you know, these are going to be conversations where you can get your questions answered, especially if you're in the VIP group. We brought in the people that we love to learn from, right? And we're both seasoned traders, but seasoned traders keep learning, right? So, you know, if you're debating it, stop debating. Just go register. You know, you want to be there. You know, you want to learn how to trade the bull run effectively. This is scheduled so that we should be hitting right when we're getting the big run-ups. You want to be clear on how you're going to trade that when that comes, because one of the things I learned in my days of trading Forex many years ago, the majority of the money I'd make would come from 5 to 6 trades a year. Like there are 5 to 6 opportunities that come up, and when they come up, you can make freaking massive amounts of money, but you got to know how to trade them in advance, because otherwise you're deer in the headlights not knowing what to do. So just do yourself a favor and register. Just come, invest in yourself. You're worth it. I promise you, you're worth it.
Totally. We're going to be doing all sorts of really amazing things, like learning technical analysis from advanced traders. Da Vinci J15 has seen all of the bull and the bear cycles and the transition. So he's probably the most seasoned trader on YouTube, because he's seen them all. Like a lot of the traders out there haven't been around too many markets, tops and bottoms. So so you want to hear what he has to say. Bitcoin family, Didi Taihutu, he's going to be talking about how do you live without fiat currency? Like how do you go 100% crypto? We've got some tax experts that are coming in to go, how do you set it up offshore? How do you deal with regulations that are coming down the pipeline in Europe, Australia, and in not so much Australia, but America, Canada, and Europe, mostly in the UK, which are getting to the point where it's only the wealthy and the elite big companies that are allowed to derivative trade with margin, right? They're kind of trying to squeeze the little guy out. So all the more reason why you need to learn from Offshore Citizen. How do you get offshore so that you don't get squeezed out of the market when those regulations come down the pipeline, because they're already on the table. Astro Finance, Osh is an awesome guy, talks about astrology. You know, we do bring in Mercury retrograde, Saturn retrograde. He's really accurate at predicting the price of crypto, when we're going to get the crashes, when we're going to get the bull cycles. And then, you know, we've got some, the executive alchemists, that's Cien and Stephanie, who are our neighbors. They're going to be doing some really good mind hacking stuff. We're talking about psychology, mindset. Jerome von Langer from the Blockchain Today is one of the best technical analysis guys out there. Is looking at what are all the market indicators outside of the chart you need to look at, as well as on the chart, in order to determine, you know, what your strategy is and how you trade that. Dan or Rob, as his name is, from Digital Asset News, is going to be talking about exit strategies. What are you going to do? And we're all going to be talking about what are you going to do with all of that Bitcoin. Crypto Wendy's talking about moon bagging, altcoin strategies that you just jump from coin to coin to coin as it moons. As soon as one's moon, take the profit, and you know what coin you then put it in to keep going, so that you don't even get those retracements, or you get very little retracements. She's got some fantastic strategies she's going to share with us. And we've got other speakers in the pipeline that are yet to confirm as well, but this is what we've got at the moment. And tickets, this is on Zoom, so we only have limited seats. So the longer you leave it, the more likely you are of not getting a seat. So we recommend you do get the cheaper price, get the early bird special in, and get in so that you are confirmed. And that's it. I think we can go from there. Yeah.
Yeah. So until
We'll
next time, guys.
Yeah.
Trade
Very
consciously.
consciously.
Yeah.
Bye, guys. Thanks for everything.
Take care, everyone.